Hi, Chris. How are you?
I'm really good at beer. How are you?
I'm very well, thank you. How is Karachi treating you?
Karachi is treating me really well. It's a beautifully warm city of vibrancy, a lot of different aspects, and it's so nice to be by the sea. And equally, the food is fantastic.
And what about your interaction? So you've had interaction with banks, you've had interaction with individuals and representatives from telcos, private institutions. What's the quality of the interaction like? And I'm asking specifically from the perspective of where are we in terms of financial disruption and inclusion? Are we at the infancy rate stage, or are we a little bit more past that?
I mean, as with every country, it's different by country, in that some countries are already digitalizing everything, others are just starting on that route. And I get the impression that it's early days in Pakistan in terms of there's a very keen awareness of financial inclusion, digitalization, digital financial transformation. And in particular, I think the thing that is driving that here is just in the last 3 years with mobile broadband in Pakistan, it's gone from 0 to 42 million people using that service, growing at 1 million a month. So there's an understanding here that's moving at a very fast pace.
We're looking at various levels. So there's that mobile inclusion, which we've been having for the past, I think, 6 or 8 years within Pakistan, even more so. Now it's the banking regulator kind of who's coming in and saying, oh, now there's so much disruption taking place there. Now let's try and bring more value into it. Correct? Traditionally, banking regulators or banks are very, very risk averse, and same goes for any bank in any part of the world. How do banks overcome that challenge and that brick and mortar, that dinosaurish feel, to ride the wave towards greater financial inclusion?
Well, the question in some ways is, do they need to?
Okay.
In that the banks here are serving just 10% of the population.
Yeah.
So 90% are unbanked. And who will they be served by? Will it be the banks, or will it be Telenor or some of the EasyPesa, other services that can bring in financial inclusion through the telco mobile broadband operations, potentially with a bank partner, or potentially without one? It depends whether the banks want to be one. The banks right now, the largest bank here has 5 million customers. It's a tiny part of the population.
Right.
How they serve those customers is with ingrained financial products and instruments that they've been dealing with for over 20 years. What you see with financial inclusion is forget those products and services. I want something completely different.
Okay.
And I think there's a great opportunity here, particularly because you have the biometric authentication system already in place, to build something.
Yeah. But the question you pose back to me is also very interesting. Is there a need for it? Because 90% of the population which has been unbanked, do they really need banking services? And what can the power of digital actually do for them?
Well, they need banking services, but they don't necessarily need banks.
Okay.
And this is what we're seeing in financial inclusion across most of the developing regions, particularly sub-Saharan Africa, Philippines, Indonesia, also here Pakistan, Afghanistan, and other countries that are developing mobile financial wallets. And what they're offering is value exchange through the mobile network that's almost free as part of the mobile subscription. So I can take a payment through the mobile network, which doesn't involve any bank. And what's actually happening right now is, and we're seeing this particularly with Orange, for example, coming out of their experiments in sub-Saharan Africa, where particularly successful in Mali, they're bringing that into Europe. And then they've recently launched a full bank service in France, because they've learned through mobile financial inclusion with a simple wallet that this is something that's an extension of the technology platform that they're offering, which is mobile network operations. Right.
It's interesting you say they started off in Mali and then moved into Europe. I would have thought, and in fact I think a couple of the questions during the conference were also, what about the more advanced economies? Why aren't they doing things first? And what challenges do they grapple with? So one would think that Mali would have a more legacy issue and a greater challenge.
It's absolutely the other way around, which is most of the economies that I call the innovation economies, sub-Saharan Africa in particular, Ghana, Tanzania, Kenya, Uganda, you're seeing that they never had any infrastructure technologically at all. And then the mobile network operators came in and offered them a digital capability to transact. And they've taken that and completely reinvented their ideas. So in Europe and America, I sit in what I call the legacy economy,
Okay.
that has legacy infrastructures implemented in the 1970s and 1980s that is now a handcuff because they're the foundations of our systems, and we need to replace the foundations.
Okay. So who leads the innovation? Is it the telcos? Is it these startups, these innovation disruptors, or is it the banks themselves, or is it the economy who says that we need an easier, more convenient way to do things?
Well, in the innovation economies, what's happening is it's the regulator and the government and the startup community and the mobile network operator seeing opportunity to serve citizens, and if all of those are involved in the program, it's highly successful. In particular, I point to also growth economies like China, where they started implementing infrastructure in the last decade, so it's internet enabled from the start, and therefore far more visionary. What we tend to find in Europe and America is that because the banks already have banked most people and they are competing just amongst themselves, they're kind of resisting these technological changes because they can see it's potentially a threat to their foundations of legacy, which they can't adapt very easily to.
I know you've only had a very limited interaction and exposure to Pakistan. You've only been in Karachi. Maybe you've interacted with, through the conference and the workshops, maybe about 100 or a few more, 100 or so various companies and organizations. But still, with this limited interaction and exposure, what country or what economy would you say Pakistan is most alike?
I hesitate to say it, but it's the one that strikes me is in India.
Okay.
Obviously because of the adjacency. But India implemented a financial inclusion program that began 10 years ago with the Aadhaar biometric authentication scheme, and then the unified payments interface and the recent demonetization program. But the difference is that in Pakistan, rather than trying to force money out of the system, you're trying to encourage money out of the system. So rather than regulate to say you can no longer use your rupees, it's saying how can we give through biometric wallets and biometric ATMs and the CDIC National Identification Scheme, a easy way for people who can't read or write but can understand numbers to get access to financial services at a very basic level. And last night I was talking to some of the CEOs of the banks here about the level 1 and level 2 basic account schemes that are being offered for financial inclusion. And I think the banks here are keen to be involved in that program, because when you're talking of 180, 190 million people that you can suddenly start to monetize and digitalize, that's a huge opportunity. And if the banks don't take it, either the telcos will, or maybe someone like Alipay and Ant Financial from China.
Okay, so speaking about Alipay and financial, is it a possibility for those products to be offered here? And if so, what needs to happen within this framework, within the infrastructure, for us to invite them and say, this is what the economy has to offer you. This is the opportunity.
I think they will be here. I mean, Ant Financial have a program to build a 2 billion user base by 2025. And currently in China they have 500 million. So it's a quadrupling of the customers. They're not going to get them from China. They're going to get them from other economies that are currently having a lot of people not served by a financial transaction capabilities. They've invested heavily in Paytm in India. They're a majority owner of Paytm, which has 200 million accounts and growing quickly in India. They are investing heavily in Ascend Money in Thailand. They've just moved into Indonesia. They've got a partnership with Mint in the Philippines. They're doing things with Kakao in South Korea. They will be here because their ambition is that they become the global platform for anybody who wants to make mobile payments and financial services.
And would you say that, in your experience, would you say that that's a good opportunity for startups also here, who can perhaps be acquired by them or partner with them and help them with that seamless process?
Totally. And that the movement of Ant is not into creating local schemes, but partnering and investing in local schemes and enabling them with their technologies to broaden and deepen those schemes. So it's not to become a foreign player in a domestic market, but to be a foreign enabler and supporter in a domestic market.
So the secret sauce here seems to be everything about volume. Right, there has to be the large customer base. It has to be, even if the large customer base does micro transactions, small payments, at least the volume makes sense.
Yeah.
Correct? And that's
absolutely. And the scalability of these programs is quite incredible, because what you can actually do now is obviously service 200 million people at the same cost as 20 million, 2 million, because it's all just the same digital transactions. To process a $1 billion payment these days is almost the same as processing a 1 cent payment.
Right.
In terms of cost, because of the infrastructure becoming so cheap. And this is the digital transformation that I write about, talk about, and I'm seeing everywhere.
Okay. It's interesting because my next question, it's almost like you're reading my mind. I was going to ask you about digital inclusion also, because it seems that, from where we started our line of questioning was, is there really a need for people to get on board with this from the consumer standpoint? But it's not just about a bank being able to sell a product or create a product. It also has to be that there has to be enough digital craziness and chaos for people to say, oh, I want to buy this, I want to download this, I want to purchase this. So from a content perspective, so that entire digital infrastructure is complete and the ecosystem is complete, can you kind of give us a sense of what all can be done with if people are online and able to make transactions or do something intelligent and smart with their phones?
Yeah, I mean, when you look at the digital platforms, and typically we're talking in economies like Pakistan, mobile broadband, because that's internet in the hand and in the pocket and purse. What we're really saying there is when you have a smartphone, you're internet enabled, you can do all the things that the internet offers, from building relationships, socializing, to buying things and being entertained and watching things. Now, again, it shows the difference between the US and the China example, which is in the US you have some giants like PayPal, Facebook, Amazon that offer the financial, social and commercial capabilities in 3 giant companies. In China, the social, commercial, financial is in 3 giant companies that do all those as an integrated offer. So Tencent, Baidu and Alibaba offer you a seamless movement between social, commercial and financial.
It's all integrated, right?
It's all integrated. A great example is socially you say, are you going to go and see this movie tonight? Shall we go together? You go and see the movie and then say, what a fantastic movie. I've just noticed that the director's crowdsourcing and crowdfunding their next movie. We could be a part of that and then get a ticket to the premiere. Let's do it. And that whole process where you're moving between the social interaction, the commercial interaction and the financial transaction, you don't feel. It's just all in one app. It's just a seamless movement. So there's no separation.
So, but that ecosystem also has to be built, correct? And everything then has to be connected.
And that's why Ant will come here, as will others, to say that ecosystem, you can build locally some of the parts of the ecosystem, but we can help you build the whole system and make it work, because they have the technologies to make that work, from lots of application program interfaces, plug and play code, through their apps, through the back-end systems.
Okay, just wanted to move the discussion on to what benefit, or sorry, not benefit, at what rate does this inclusion actually happen, or this transformation actually happen within the sector and also within the adoption? Are there any examples that you can talk about for, let's say, Bangladesh or India or Vietnam, those areas?
Well, the one we normally step back to as the poster child of inclusion is M-Pesa in Kenya. And when they launched, they estimated 500,000 users in 18 months, and they got 2 million in the first 12 months. So it was way beyond their expectations. And now pretty much 40 million people in Kenya, the whole adult population, are using M-Pesa to pay, because it's so easy. It's becomes a very networked effect capability, as in, you've got money, I've sent you money, you want to get your money, you open an M-Pesa account to get them. It's really easy. So it's viral, it's networked. But one of the key things around that is that you may have the whole population now using a mobile wallet, but when they started, only 2.5 million Kenyans had bank accounts. And that figure's almost 10 times the number now. In fact, it's nearing 20 million. So what you're seeing is, because you get a mobile wallet, you get mobile transactions and mobile credit and mobile services, you get the opportunity to then go to a bank and say, look, I have a financial history here, you can trust me to be banked. And so large numbers of people getting banks who couldn't before, because it was physically too difficult to service them and the cost was too high, but now it's digital and it's with the mobile credit history, it's far easier.
There was a question during the conference which kind of stands out to me, where the gentleman asked, so how should customers be convinced, with there could be cyber attacks, there could be hacks, so on and so forth, and I it just got me thinking that if this entire experience is seamless, the customer doesn't need to know anything. He just or she just has to be able to use and make use of the system.
Yeah.
But the system has to be tempting enough and incentivized enough for them to actually come on board.
Yes.
So do you think, sorry, go ahead.
Well, the immediate incentivization with M-Pesa, and I think this applies to most financial inclusion projects, is that what's the alternative? Well, the alternative is a physical hawala system, or giving your money to some taxi driver or bus driver in the hope they might deliver it.
And just bypass the system completely.
Yeah.
That money never gets into the system, right?
Yeah, exactly. So the incentivization here from the customer's viewpoint is you have a secure digital transaction capability but at a much lower cost, much lower commission than the physical alternatives that were there before. From the bank's perspective, it's saying there's a big market here we could serve, but if they don't see that market to serve, then they'll give it away to others.
Right. What about information security? How much how secure is the environment? And I know it's kind of a really silly question from the perspective. Of course, it is secure because it has to be secure because otherwise nothing works.
It's not always secure. I mean, the Bank of Bangladesh almost lost $81 million. Well, they lost $81 million, but they almost lost $1 billion last year because their network was attacked. And what's interesting in the context of that attack and most other attacks is that it's nothing to do with the technology. Technology can be vulnerable, but that's normally plugged very quickly.
Right.
But what most cyber attacks and cyber hackers and cyber criminals do is use social engineering of people to get into the network.
Right.
Because it's quite easy to fool you that you can trust me, and then if you do, then you give me access to services that I shouldn't have access to because I'm completely untrustworthy.
Of course.
Don't say of course. You can trust me.
No, of course, I can trust you.
But it is this thing that every hacker I know is using social engineering to hack.
Okay.
And it's the humans in the network that are the weakness in the network typically, rather than the technology itself.
The humans are always the weakest link. Let's talk about a little bit about, once again, coming here, how would you rate the kinds of, your interaction with banks and organizations here? I had initially asked you, are we in a phase of infancy? And you said it's kind of tough to tell. But I'm just trying to think that how much further do you think these guys have to go before they see massive volume come on board?
I mean, it is there, definitely, and that you've got the State Bank of Pakistan, the regulator, creating the environment to leverage the telecoms capabilities. You've got the telecommunications regulator, the Pakistan Telecommunication Authority, looking at how to get more inclusion. And when you see the numbers, 38% of the population currently now on mobile broadband, moving at such a pace. And I think it's how to keep up. So the conversation was mainly around banks are working on committees with the State Bank of Pakistan to get more banking inclusion into the network. But can they keep up with the speed with how the network is growing?
On your blog, I read a really interesting piece on open banks. Can you explain the concept of open banks and how it applies to economies?
My definition of open banking is the open sourcing of the financial structures, where in the back office, the analytics of the data is leveraged through the middle office by application program interfaces code into the customer's experience in apps and devices in the front office. Now there are other definitions. So a regulatory definition in the UK is open banking is just creating all the functions of a bank in an API marketplace. In Europe, it's just for payments in an open API structure. But what we are seeing is the regulators telling the banks that they have to become open to third parties, having access to their data, their customers, their products and their services in a collaborative, collegiate fashion, which is quite difficult for a lot of the banks because they've had everything controlled by themselves in history. So suddenly to say, I don't control everything, I have to partner with everyone, this is difficult.
Right. There was an interesting example you also quoted, and I think a couple of the other presenters also did, of Denmark and of the Nordic countries, where it's essentially a cashless economy, or that's where they're headed to. Is that something which is applicable to all countries, all economies?
It's been something that's been attacked for a long time, a war on cash. And the reason why there's a war on cash is that cash is a great way to avoid government.
Okay.
And that although the government issues the cash, you then can use it as an anonymous immediate payment exchange of value that can therefore be used for goods and services that governments don't see.
And the documented economy.
Exactly, in the documented economy. So governments are very keen to digitalize money because then it would be auditable and taxable. And that's what it's the strong interest of Sweden and other economies. But it also does make the economies stronger. So by way of example, the McKinsey report on financial inclusion said that something like $3.7 trillion worth of increased productivity will be released over the next 8 years into the economies of the emerging markets, just because people can actually be networked and trade and transact with each other through the mobile network.
Right.
It's a massive amount of improvement of productivity.
We're making everything, we're automating things, we're making them smarter, faster, more efficient, seamless. What does this do to the social context of where we live? I mean, the future of a bank branch is that some people come and it's a social gathering, and you use the ATM to open your account or deposit a check or something. What happens in terms of the social context of the human-to-human interaction?
Well, social is now a relationship that's in your device. So social today is having a dinner party where everyone looks into their mobile phone. That's going to be that's the way it's going, And maybe you'll be actually talking to the person sitting next to you, but through Facebook or something else. You don't bother looking up and actually seeing them. And that's actually quite a big challenge, because we have become cyborgs, where we're attached to our devices and they are our network and our life. And somehow we have to reprogram ourselves as we immerse ourselves in technology to look up and smell the coffee.
Which you can't do through Facebook, no matter how much you try.
You have smelly vision soon.
That too. Just wanted to wrap things up, and just wanted to find out a little bit about, would you have plans to come back to Pakistan? Would you encourage others to come? What kind of opportunity do you see for consultants and people such as yourself to come here and interact with the...
Well, I'm due to be back here later this year.
Okay.
Plans under discussion. And I think there's different places that get tarnished in different ways.
Right.
And Pakistan has been a little bit tarnished in the Western media, just because of what's been happening in this region. So for example, when I came here, I got quite a few comments from my American friends saying why, and I went, why not? And it's really to do with I'm a different beast and I travel all the time, and what I find is almost every country I go to, everyone's the same. They just want a good life and prosperity for their friends and family, and sometimes they're run by governments that don't quite understand how to give them that capability. So by way of example, I went to Iran several times under Ahmadinejad.
Okay.
And I'm not comparing two countries, but what happened is people said to me, you are mad to go to Iran. And if I'm honest, I had the best experience ever.
Okay.
Because you're treated as someone who's not rejecting the welcome offer that's given by that country to you to come.
Of course.
And so I very rarely reject any welcome offers, because I realize it's a thirst for knowledge, and if I can help give the knowledge and share the knowledge, then that's what I'm trying to do. And
so now that you've been here, and like I keep emphasizing, you've had very limited interaction, but what kind of opportunity do you see here?
I think there's huge opportunity here. I mean, obviously from the banking system itself, there's a small number of small banks, and I say small because when you're looking at the big companies that provide technology and consultancy services, they're looking at banks that deal with tens of millions of people rather than 5 million people. But I think as you look at a country of 200 million, there's scale there. And when you're looking at a country that has this opportunity for financial inclusion through mobile wallets and mobile networks, then certainly anyone who's involved in mobile financial services should be on the ground here, because they're missing a massive opportunity if they're ignoring it.
Great. Thank you. Anything else you'd like to touch on, which I may have not asked about?
No, but buy my books, and my new book's called Digital Human, which will be all about how we're becoming cyborgs.
So let me just ask you the question so that you can then put it in. So just one last question before we wrap things up is, tell me a little bit about the books you've read and also your blog, What kind of, and how can people purchase the book and subscribe to your blog?
Yeah, there's local distributors here, which Terrabiz can provide the contact details, where my last two successful books, Digital Bank and Value Web, talking about how to change the bank and why change the bank, and it's all to do with fintech, building this internet of value. And then my new book's going to be called Digital Human, which is all about the change in humanity that technology is bringing into how we live and relate and trade and transact with each other. And a lot of that is bubbling away in what I write on my blog, so I'm quite a sad person. I blog every single day
I
at
hear even on
thefinancer.com.
Sundays.
Yes, I mean, it's something I got into a habit of doing, and I've been doing it for 10 years now, but it's mainly because there's lots of people out there who want to read what I'm thinking and what I'm hearing, and because I travel non-stop, thefinancer.com shares that knowledge through digital means rather than having to have me physically here.
Right, great. No, but we're very pleased to have you here and have the opportunity to get the knowledge share. Thank you for the time.